Check, check. 1, 2, 3. All right. Good evening, everybody. Hope everyone's doing well. Um, let's go through market review. A reminder: Tuesdays and Thursdays, I will not be trading, and I'm at work physically, so I feel bad because every single time we have a live recording, there's somebody that comes in expecting me to be there live trading, and I can't be there for you. So, but I want to, but I just can't. So tomorrow is gonna be a recording day. Let's take a look and hop into the charts though, so that we're ready for tomorrow. I'm gonna take a look and walk through what I see. So let's take a look at the weekly right now. So reminder, we're still in that premium there. So let's take a look at these past couple weeks. So what have we done this week? We've gone above the past 2 weeks highs. We've gone into this, and reminder, pay attention to the yellow lines on the weekly. This is my weekly level. These we've been heading up into this fair value gap that I had mentioned right as this last day formed on this week 39. So we've gone past that now, and we've actually gone all the way up. Let me zoom up a little bit. So we have this whole, let me see if I can get the whole thing. So from up here to down here, we have that weekly SIBI. And what have we done? Well, we went up to the consequent encroachment of that fair value gap. This is of actually not only that fair value gap, but also of the whole swing from top swing high to swing low. That, my friends, is significant. Now, that is only the 50% mark, so it is now fair value for shorts to start layering into their positions. And what's left? We still have some of this imbalance left. Will it go fill all of it? I don't know. But on the weekly, I fully expect us to maybe head back up and fill in the rest of this daily fair value gap. And let's go down to the daily so you can see that there. If this thing will ever load. So on the daily, we can see we're kind of looking like this. Let's zoom in on where we're at here. So on the daily, remember, you're looking at these purple lines. I'm pointing out fair value gaps for you here. I don't anticipate this one filling in, although it is possible. I'm more so looking for the daily to continue expansion to take out this daily SIBI high. So from this low to this high, there's a gap there. And this high happens to be above that equilibrium point. So this would be the first area of potential reversal that I would expect this week at some point. Does it have to go all the way? No. There's this midway point of this gap. There are a couple of higher time frame items like the inversion fair value gap high. It doesn't look like at this point, since we traded through it 50%, I'm not convinced it's going to break there on the monthly. Go back to the monthly and take a look at what it looks like, because then you'll have a good sense of like what I'm talking about, what I'm looking at when I see price go up, down, and paint up and down on it and back up. So on the daily, I think we're still reaching up here a little bit. I'm not sure if it's going to happen in London or not, but I think if it doesn't do that in New York, I think we have a good chance of continuing upwards here. And then there is a monthly down wick consequent encroachment. If we are bearish, I wouldn't want to see it go much higher than 15,266.75. Remember, this week we've got tomorrow it's mostly just FOMC speakers, pretty much nothing burgers. But then Wednesday and Thursday, you've got core PPI to 8:30 a.m. and then Thursday CPI at 8:30 a.m. So that's where a lot of movement is going to happen, and where a lot of people can get their asses waxed. So you got to be careful about this, okay? On those days, I'll be with you here on Wednesday, but I'm not going to be here with you on Thursday on CPI day. But I'll join back on Friday and see what we can find to trade. So again, daily, I think we are going to head up towards that untouched premium SIBI high, 15248.5, and maybe halfway to this halfway point of this wick here, we'll see if that goes up there all the way there. Ideally, I wouldn't want to go much further than that, but I do see that there's an old new week opening gap up here, and this is a bearish order block, and there's a volume imbalance there. So what does that look like in terms of a Fibonacci from this swing to this swing? That puts us at about the 79% mark. So still within optimal trade entry, which is a whole nother model. You don't have to know it, but if you want to, there's ICT videos that go 100% all the way through that. Just go to the 2016 material and you'll find it there. So that's on the daily where I think we're going to head. Let's take a look down at the hourly. Oops, I did not want to do that. I wanted to keep that there. Okay, so we're on the hourly, so we can kind of take a look and see what happened today. So we're looking at the past few days, and there's a lot of lines on this, so please bear with me on this. I do plan on cleaning this up a little bit. It's just gotten a little bit unruly. But the first thing I want to look at is, hey, real-time hours. This was a liquidity gap that I mentioned in the morning, right? I expected that to fill in, and I was pointing to that as well as some of our previous weekly draws. So when we see this range all this morning, that's what we saw all right throughout here. Right before open, we see open occurs. We see that down candle that's down here, and then we see price come back up, go back down, and then come back up a little bit further, and then really hit the big spike up and through this short-term high. I was pulling, because this is a liquidity void, this is something where there's zero price action. It had no price action before, it had no price action through. It only went from one point to ending at one point and opening at another point. So there is no price action there. So it's a stronger draw on liquidity. Not always, but it is a strong draw on liquidity for what we were looking for today. And I was able to take a sim trade today on that because I wasn't able to stay concentrated over here. And you don't want to trade when you have no concentration, especially if you're thinking about using trade copier to copy a lot of trades. So we see that the daily expansion happened upwards. We start here, we go down first, and then we expand upwards, right? So open, and then we have that movement lower to catch some people short, and then we want to blow them up long. So you know, the real-time hour gap, you want to keep that around. I don't keep it all in my charts at once, but I do keep that around so I can visualize that on a different screen. So on the hourly, we see that once we broke that swing high here, or even that swing high really, this is when we started to see a true market structure shift. Now on the lower time frame, it was still pretty choppy, but that is our shift there. And when we head back down here, we'll see some signatures that we were hopefully looking for on the 15-minute. Now you can actually see that we've gone above this downswing equilibrium. It was at 15221.75, but now it's 15222 as the high. So that is significant. We've hit the midpoint there, and I think that there's now people will be okay taking shorts or layering into their long-term swing shorts. So let's take a look on the 15-minute here. So one thing that we do see at 11:15, 11:30 is a return to, there's a lunchtime macro that they try to return back to previous highs or previous lows. So that combined with this short-term high here, we see this fair value gap form. we kind of would have been able to take that here from, let's say you got it, you know, I don't know, somewhere around here, where this was what opened at around 15,031. And then let's say you exited at the height here. I mean, that's a lot of pips. Even that's like 60 some handles right there. And even if you didn't hit the high up there, even if you just went to this current new week opening gap low, that's 15,076 from 1530. That's like 40 handles. So it's a lot of movement. And so 15-minute is really worthwhile checking periodically to make sure that any 15-minute candles have formed or have not formed. And you will need to see if there is a close on this candle, then this candle. You need to be looking, dropping down to a higher time frame, marking that, and then looking to see if there are openings there. So let me do that for you right now. We'll borrow this blue box here. So here we go. So we'll drop down into a 5-minute chart and we'll see what else is there. Everything else here is all serving as draw on liquidity. Liquidity void, draw to the buy side. Short-term high, draw to the buy side. Current no week opening gap high and low, draw to the buy side, draw to the buy side as well. And then beyond that, we see the weekly SIBI consequent encroachment or midway point, and we draw to that as well. We drew to that rather today and then rejected the end of the day. So let's go down to the 5-minute and let's see. So you can kind of see the opening range. The opening range here, right at 9 o'clock. Before then, we stayed in a nice consolidated range. You can make a lot of money from this. I mean, this was 15,027 all the way down to 14,980 basically. So 1530 to 980. That's a 50 handle range. 50, 100, 150, 200. If you are able to trade rejections and consolidations, then you could have certainly capitalized upon that. Now, as you get closer to the open, that's when you need to be a little bit more careful. We let this kind of go, take out all those sell stops, head back up to that weekly week 39 high, and it just bounced off of that. Went back to this fair value gap low, continued up, rejected once more, headed back to this low sell side liquidity, and then we started to head up and out, right? So there are gaps here, 1, 2, 3, and this is the closest gap that you get. So it would have been hard trying to wait for that one, I think. Let's go down to the 1 minute though and see if there's any sort of evidence for us to take that further. Remember, that was at 11 o'clock, okay? Okay, so this is on the 1 minute chart, right? So this was the 5-minute gap that we saw earlier. Let's see if we see anything else. So at 10 o'clock, we ended up having, this is a silver bullet right here. If you were keen on following it, you would have gone in around here. This is the first fair value. This is the first one that's breakaway gap. The second one here is fair value. We can see the bodies respecting that. And we can take this anywhere from the high on this candle. This would be 14,979.50 all the way down to, let's see if I can grab this thing. Okay, there we go. 14,734.50. So yeah, that was the first silver bullet down to a area of interest. And after then, we see we exit this volume imbalance right here. Now, there's no fair value gaps except for maybe down here, right? So the last fair value gap that hasn't been tackled would be right about here. Okay. What does that look like now? This is a return to a discount fair value gap before we now end up. We already started one run here, so this would have caught some latecomers, and this would have destroyed them as well if their stop loss wasn't disciplined. So what we have here is a return to a fair value gap. It bounces straight off of that, and it stays up in this quadrant here. And that's exactly what we were looking for. Signatures of that nature, that it would continue upwards. Given the draws on liquidity, we continued forward with these and moved ahead. Let's see. Yep, I mean, I think that's all that happened today. Let's go back to the 60 minutes so we can talk about what we see in the coming day. So we see that we're quickly approaching this area of this mitigation area. So this whole candle from high to low, 15,248 to 15,316. You're going to need to really pay attention to that to see if it acts like a mitigation block and then continues on that direction. Or if this continues to go above it, become a really, really big, like a low, high, lower, low, higher, high, and then the same low. If that turns into a breaker, which I don't think it will, but if it does, that's where I'd be watching, or at least this mitigation. We would see that there are some things that are trying to mitigate their losses here, some buys, by staying break even. So yeah, I mean, my bias for tomorrow hasn't changed. We're going to go up a little bit first. It is Tuesday of a CPI week, so Monday, Tuesday trading should be sufficient. And then I expect it to consolidate a little bit today. Yeah, and I think that's really it. Nothing else too crazy on these. I definitely got a request earlier to do one of these charts from scratch. So like going from high time frame to lower time frame. I'm definitely going to do a video on that. Just I haven't had time to. So I will try to get that recorded maybe one of these days that I'm not physically going into work, so that you can watch it and like kind of trade along, like kind of like if you have TradingView open on the side, you can come along and also chart the things that I see as well. So yeah, I think with that, I mean, I see we've already gone well above that weekly 50% mark. So it looks like we're going to head to the daily premium discount, or the daily premium SIBI high, and the monthly inversion fair value gap. So we'll keep an eye on it. We'll keep an eye on that for now. Not really sure what's going to happen in London, but if I'm expecting this to be any sort of a bearish week, I would expect to see mitigation at that time. If we don't get mitigation, then we will have to reconsider what might happen in the future after CPI. So with that, I am tired. I've been trying to make sure I can pump these out, and I want to say thank you very much for the people who subscribed, and I can't believe it. I'm looking at the channel. I went from 114 to 123 subscribers. So thank you so much, subscriber. If you made it this far, thank you so much. I appreciate you. And thank you very much for the feedback, folks. I appreciate the comments. I read every single one of them. So keep them coming. If there's anything that I can do better, I'm willing to advance and always willing to adapt. So let me know if there's anything I can do better. But good luck. Reminder, tomorrow I will not be physically here. So I will be recording price action, but I will not be able to trade it. So good luck tomorrow. Be careful, because I'm starting to see us get into an area where we can acceptably sell. So look for the signatures, though. Wait for like the big displacement candles. Wait for those, and you'll have a much better shot that something has or is on the way towards reversing. Don't try and pick the top. You know, if it's in that direction, keep it going until you see a signature. Otherwise, look for those fair value gaps to get formed. Look for those fair value gaps for entries. And then if it fails, then you know that you're on the wrong side, but make sure that you entered properly so that you know you're on the wrong side. So, okay, so with that, I'm gonna go get some water. I'm gonna close this stream and then do a little bit of charting. Well, you know what? I'll probably chart when we get back tomorrow, because it doesn't really make sense for me to chart much more than I've already had on the chart, since I won't be here trading. But if there's any other questions, let me know. I plan on recording a video that walks us through how to go time frame by time frame. I think I'll see if there's time this week to record that. I think that's a really good idea, and I will definitely do that. So with that, take care, have a good evening, study, get sleep, and then keep your eye out for some of those Fed speakers tomorrow. There's a lot of manual intervention that can happen with those. So make sure you go to Forex Factory and look those up. With that, have a good night, and I will catch up with you some more later on tomorrow evening. Oh, for those that care, I don't know if anybody cares, but 4 more accounts passed as expected. So if you go to that post, you'll see that there are a whole bunch more. There's 4 more that I have passed. I basically take micro trades, one micro trade, and when I'm well over the $3,000 limit, and I make sure that those all pass. So with that, the count goes up to 18, and then there's 2 more that will close tomorrow and turn into performance accounts. At that point, I'll be a maximum performance accounts, and I can start to scale with one contract, starting from one contract. So I'm also planning on doing a risk and specifically a prop firm risk analysis type video. I haven't been able to finish it yet because I need some time. So I'll be walking you through a tool that you can create for yourself too, and you must create it for yourself. It won't help if you just take mine. So I will walk us through a risk management and how to think about it, and how to think about patience in general, in order to pass these accounts and to become profitable. There's plenty of time. There's always going to be tons and tons of trades, so you don't have to worry about that, but that is coming soon too. So look forward to those 2 kind of videos coming up next, and I'm excited to record them for you. I hope they're beneficial for you. If there's anything else that you want me to record, I'm keeping a list, and I'll in due time I'll probably incorporate it, but these are the ones that come soon first. So with that, finally, have a good night. We'll catch up soon, and yeah, get some rest. Okay, so good trading tomorrow. I won't be with you. I'll be with you in spirit. And again, thank you so much for the views and the likes and the subscribes. That really means a lot to me. So I appreciate you. Let's get this, keep it going. All right. Take care. Good night.